do some progress with that. Give me another second so I can set up everything. Live. Why don't I see it? It should show. One second, okay. Why does it show the live show? Don't understand. Okay, let me see. Live stream. Go to my channel. Okay, yes, I see it. Okay. Okay, let me post this online. Okay, post. Okay. All right, I'm ready. Okay, let me share the screen. Share screen. Hello. Looking for this screen I want to share with you guys. With this, I just added it. Sorry, it's taking all this time. All right, so how is everybody doing? It was not a big deal. We went a little bit down, right? And then we recovered. And I told everybody, don't worry about it. It's not a big deal. I'm very surprised about this new indicator that we have that seems to work very nice with very short time frames. I'm not sure why it's working so well, but so I'm using 8 hours, and then basically what I did, I look up the deviations from the power law, and they seem to be very regular. Like there are a lot of periodicity. So basically, I do what is called okay, and now you should be able to. Oh, let me also share it in the. Let me give you the link for the. So we're doing it on YouTube today. So I'm going to give you the link for the YouTube channel, so you can actually see it on the screen. Also, because sometimes I have a problem with this sharing on Discord. So, and plus we record it for everybody. So let me give you the link. I'm going to put it in the chat window. Okay, just a second. Give me 1 second. All right. Yeah. So for that indicator, what I'm doing, I found these periodicities basically that Bitcoin seems to be very periodic on many different scales. Like, of course, there is the 4 years scale that everybody's familiar with, but I see many others. And so this is what I was using for that one. So I'm going to put it in the chat in the Discord channel. Okay, here. And you get the chat by clicking. There is this little bubble if you go under the general chat, right? You click that one. And then you can see there is a chat on the right side. And so if you click on the YouTube channel, you will be able to see the video. So please go there. I will give everybody a second to go there. Yeah, so what I did, I look at the deviation from the power law, because this is the adaptive power law. This is why it's so nice to have the adaptive kind, because the adaptive kind allows us to kind of follow the general trend at the level of few days. And then I look at deviation from that trend, and I use this tool it's called Fourier analysis. Basically looks for all kinds of different periodicities. Like they look like peaks. So basically you plot the frequency, and you can look for everything. Usually the theory says you can look, so if you have depends on the time scales you're looking, right? So it's 2 times the sampling rate. So if you're looking at, let's say you're looking at 8 hours frame, and if you have a paid version of TradingView, it allows you to set up the time frame that you like. Like you can do it 3 hours, 5 hours, and so on. You can do that with the non-paid version. But if you have a paid version, then you can set up, and Towers looks very good with this particular indicator that I built. It's not the one that you're seeing here on the screen. This one is the one that we're learning how to code. But it's the one that I just posted, where you see these nice fluctuations in the price. And he was able to catch this one, actually kind of predict, because it looks like when this periodicity happens, you have tops and bottoms. And it has about 70% success rate. So I see these peaks, so I do what is called the Fourier analysis. And then you look at basically the amplitude of these oscillations versus the frequency. And then you can pick up the frequency. There was one that was really dominant, that was like on the order of a couple of weeks. And so I kind of modeled that, and the phase also, right? The phase is basically how it shifted relatively to the data. And so I kind of align it with some of these peaks that seem to appear on a very regular fashion. And then you can see these oscillations, they kind of follow the general trend of the price. And it looks like when this time comes, and sometimes, it's like 1 day later, 1 day earlier, but it follows what Bitcoin is doing at this local level, and we want to use it. I think the best use for our style, right? Because I don't suggest to trade. Some people like to trade, but that probably is not for everybody. But what we can do, if we can confirm it that is correct, we can integrate it with DCA, with the DCA tools that we're developing, because then we can kind of like buy the dips, right? So if we identify that there was a dip here, when we give our signals, we can say, hey, wait, and then when we get the dip, we can say, okay, it's time to buy now, right? So let's say you get paid 2 days ago, and we tell you, oh, look, okay, it seems that the price is going down because the indicator was able to tell us there was some kind of local top. Wait a couple of days more, and then buy the dip. So instead of buying it at 70,000, buy it at 58, right? So it would really be cool if we can confirm it is a correct signal, then we can integrate it with all the other things that we are doing. Yeah, I posted. I can put the post. I put it online. I'm not going to share the code because some things I don't mind to share them at all. Other stuff it's a little, we want to keep it a little bit for ourselves, But for sure, I'm going to make. I'm thinking. I was talking with my son. We're going to make an indicator, and then the Discord group for sure will have access before anybody else, probably only through the Discord group, and then. We are going to integrate it in the automated tools, because we are building basically these automated. So right now, if you go under the Discord, right, guys, there is this new channel. It's called Power Loss Signals. So every day is giving you the charts. I'm going to see if the guys that are helping me with that, it's a group of Italian developers. I want to see if we can make actually a signal out of this thing too. And so for now, it's completely free channel, and eventually it will still be free for the Discord group, but eventually then we will have an automated version of it, and it will be a little price to get, because we need to maintain the servers, everything. So it will be, I don't know, $10 to get like a automated DCA, where you can buy the dips, you can sell the tops if you want local, or maybe you can wait, So we are going to give a bunch of different options to the users, and people can optimize it for themselves. But if you add a tool like this, like I just posted the analysis here on the chat, you can see it has it indicated like that top that we had around 70,000. It says you should sell. And then it got us, the new, it kind of almost predictive, because basically the idea is that kind of marks in red and in green, like an area where it seems we are expecting the price to go down, and then it kind of indicates by green the price is supposed to go up. And if kind of follow very well this periodicity, basically with a 70% success rate, and then this 5 number that is basically telling you how good your success rate is in comparison with when you are wrong. So when you're wrong, when you're right, you are 5 times more right? You have your wins in terms of how big they are 5 times bigger, 5 point something bigger than your losses. So when you're wrong, but you're not that wrong. Your losses are small. So in comparison, right, and not just in terms of how many of them, but how big they are. So it gives you, basically, there are 2 main important numbers when you use TradingView. Like TradingView allows you to do back testing, and it gives you 2 main number. One is the success rate, and then the other one, what is the particular name that we're using? I know what it means, but I'm trying to find the terminology. Let's see. I have it open in front of me. Yeah, it's called the profit factor. Yeah, the profit factor. We have a profit factor of 5.4. So that means if you look at the average loss and the average gain, you take the ratio of these two, then you are 5 times in favor of your wins. It is pretty amazing. Like usually, if you have a profit factor of 2, 3, that is huge for a trading strategy. And if you have like a success rate of 60%, that is amazing, because it's basically having a trick dice, right? You have trick dice that is 70% in your favor. It's crazy, and every time you win 5 times bigger. So let's see how it works. If it really works, because I'm thinking every day, how can I bring this to the next stage? How can I bring to the next stage? This is what I'm thinking when I go to sleep, and when I wake up, I think about the same thing. Okay, what can we do today to go to the next level? And this is what I do, and hopefully this works. It's not me. It's like how incredible Bitcoin is. It's so incredibly precise that if you listen to Bitcoin, then you're really successful. In doing things. But anyway, let me see if I can. We can go back to the. Do you have any questions, by the way, about anything? Yeah. Mm-hmm. Right. So it's a very valid questions, and just a second. I'm changing this thing. Okay, class. Okay. Yeah. So there are two answers to that question. One is, first of all, I think that it is still very few of us. It's not like, because even if it's becoming popular, it's still a relatively small number. Like the people that are using the indicators. Like few hundred people, right? So it's are not going to really affect the market. And then a lot of the things that we want to do, like buying at the bottom, buying at the top, are things that are going to happen anyway, right? It's not that because these guys are trying to understand how the tops and bottoms work. We are going to do something else. They have their own agenda. This, if you're looking at the data, who is buying and who is selling, it's mostly the long-term holders, and they follow different patterns. There is some liquidity, like a global liquidity connection. It's not very strong, but money is being freed from other investments or is going back to other investments, and so we have a kind of like a rotating schedule or whatever. And so we are going to do, these are large whales sometimes, and then everybody else follow them. We are not going to follow us. We are going to follow these guys because these are the big whales. And so I think it is one of these things where it's really difficult for to be changed, because it's really follow these huge big patterns. And the power law, the entire idea of a power law, that is basically very, very robust. Even if somebody's trying to push it around, basically this is what Bitcoin decided. It's not like some weak. So what happened in many trading systems, it's a continuous arm race, because you find a little bit of alpha, and these are how many of these, because I did it myself for a long time. You look for all kind of possible combinations, some new ideas, some new indicator, and you find a little bit of an edge. Like, for example, when you do this back testing, you have to be careful, because many times it can be due by chance, but there are ways of telling, okay, I'm not doing it by chance, and this is a real alpha. But sometimes you get maybe 56%, like even a little bit of alpha, like beating the market by 5%, by 10%. It's amazing, because you can make a lot of money. And then maybe a profit factor of 3 or 2.5. It's still a very good trading system. The problem with that is usually lasts like a few months, because for some reason the market changes. I don't think not necessarily people know what you're doing, but I noticed also I had like a public signal at a certain point about stocks, and I noticed once we made it public, it could have been a coincidence, but there were not many of us. We were like maybe a couple of hundred people again, but I noticed that we started to lose alpha with time, and so it could be something where people can maybe do the opposite what they're trying to do, or whatever. I know that some of the very large, there are some people that they have like thousands of people following them, and they say, okay, let's do something crazy with this stock, right? So they push basically pump and dump, and then they dump on their users, etc. But it's nothing like this here. We're talking about very, very, very stable trends in Bitcoin that is like billions of dollars worth. And this is what Bitcoin decided to do over a period of 15 years. And the fact that now some people are paying attention. First of all, okay, I published this stuff 5 years ago. Maybe not many people were aware of it. Now maybe more people are aware of it. The bottom line, I think, is going to make it stronger. It's like one of these self-reinforcing loops where if people started to actually listen and follow the trends and follow the pattern, it's going to make it stronger, not weaker. And plus, I don't think you can play around with it. It will self-adjust, right? Maybe they can push it a little bit where there is like a temporary fluctuation, but then it wants to go back. That is the entire theory. Now, is it going to happen? Not going to happen? We are going to see. We are going to see if. So, for example, the reason why we have this deviation from where we should be right now, because according to the theory, we should be very, very close to the bottom still, because it's not time to do this frenzy bull. The frenzy bull happens at very precise times, like we have this clock, and that time is actually the end of this year. So when this year is ending, towards December, this is when we are going to expect the full bull. Then when the full bull should really happen, and so everybody should be ready for that. But before that, we are supposed to be kind of close to the bottom. That is this. It's not really a bear market because we are still going up with this power of 6. That is crazy. But usually we spend 2 years following the power law, and then after 2 years, the end of these 2 years should be in December of this year, and then the frenzy bull market starts. That is in our clock. So we are right now at like about 7 times 7, Bitcoin times 7. We have this terminology of a time, right? So 7 means we have 2 hours before 9, and 9 when 9 should be the frenzy bull market. And then 12 o'clock is when we have a peak, and every 3 hours is about 1 year. So we are a little bit less than 1 year to the frenzy market. And so 7 and 9 will be the frenzy market. But the reason we are very close to the trend when we should not be close to the trend, because of the ETFs. There was a lot of excitement, a lot of anticipation, and the ETF don't represent anything new in terms of where Bitcoin is. They represent exactly what we need. It's almost crazy. Like I actually went and did the calculation. It turns out that to go where we need to go, that is like $1 million in 10 years, you need more or less the flow that the ETFs have brought so far. In fact, a little bit more. We need more than maybe like 20-30% more than what the ETFs have done so far. And then, without considering, like we saw in the last days, that ETFs doesn't always mean positive flow. Sometimes they are going to sell. They are going to sell and buy, etc. But in average, hopefully, they continue to buy. They are contributing to the adoption. It's an indirect form of adoption, and so it's pretty cool because we involve other people, not directly in buying Bitcoin directly, but through pension funds, etc. It's exactly what we needed to go to the next level. And so I don't think this is going to change. Actually, it's really weird, because it will be really weird, right? Because it's when you are thinking about all these things, the consequences of what we are saying, that there is this asset that is perfectly predictable, that is going to follow these patterns, and is the first time in history where we had something like that. And people will think, well, anytime there is something like that, if people are aware of it, they are going to break it. No, the theory says no. Actually, you're going to make it stronger. You're going to amplify these loops by being aware of that. So this is what the theory says. Now, is it going to be true? Not true. We're going to see. So that is kind of to answer your general question. Yeah, and it's basic. I think what happens, right? These power laws are associated with the path of least resistance. Like when a system likes, when follows these power laws, it's all about minimizing or optimizing some process. This is why, for example, you find them in physiology. Like how energy is used as a function of weight. Like we're reading this book. If you can come to on Thursday meeting that we have, because we're reading the scale book, and they discuss it there. Like it turns out, even there, like if you are a bodybuilder, how you scale up your power, your ability to lift things, goes up with the power law. It's a power law of 2/3, and that is because there is an optimization between the blood flow in your tissues and the volume. So 2 is about the blood flow, because it's how much blood goes through the veins, right? Because it's basically a cross section, and then the 3 comes from how much mass you can build as you train. This applies, of course, only to bodybuilder because they are optimizing this ratio. Now, if you take a fat person, of course, he will not follow the power law because it's fat, and he has you can increase his mass without increasing his power in lifting weights. But in a bodybuilder where everything is optimizing, his muscle relatively to much. Uh, sorry, I have a little bit of a cough. It's a blood flow that goes. It's optimized by this power law. You cannot do better. You cannot break it. Like somebody say, "Can I break it? I want to break it. I want to be stronger. I don't like this 2/3." Because if that actually tells you there is a little bit of diminishing return there. Even like people are talking about diminishing return with the power law. It's a power of 6. You're not diminishing anything. But with a 2/3, yes, it's a flattening like this, where it doesn't really pay a lot of. Of course, when you do a sport, even having a little bit of advantage can beat somebody. Like you can be the winner by increasing just a little bit or something. But if somebody wants to break it and say, "Hey, I don't like 2/3. I want, whatever, something bigger. I want to go above 1," right? Well, you cannot. Even with steroids, even like maybe a little bit with steroids, you're going to exaggerate, but then you get sick, right? And you get all kind of bad effects. But even there, you would not be able to break it too much, because this is physics. It's this is if think about this. How can you break it? This is what Bitcoin decided over 15 years. They decided in this quote unquote, right, by interactions of different effects, etc. That is what the system decided through all this interaction between people, machines, energy, time, money. That is his best path. It needs to grow and grow and grow and be adopted by all mankind and became the monetary system of the world. He didn't find another better path. This is the best path. Again, this is what the beauty of having a theory, because when you have a theory, you try to make sense of all these things. It's not just a model. You're saying, okay, I think I understand how Bitcoin works. I know it sounds a crazy claim, but it's like almost kind of be honest when you do this theory, because you're saying, as a scientist, I want to understand how this system works. This is what I'm thinking. This is what I'm proposing, and I could be wrong. This is why we say a theory is falsifiable. If more data comes and say, "Hey, Giovanni, your theory, it was a good attempt. It was a noble thing," because it's a noble thing to try to understand something scientifically. But something happened. Maybe you didn't have all the components. We need to add this component. We need to add this other component. I don't think we are completely wrong, because there is too much information and too much analysis that goes into it, and how all the pieces work together. That has to be something true there. But it is possible that the theory is not complete and we are missing something. So this is why it's actually also an invitation for other people to come in and contribute and improve the theory, expand it, like Einstein did with Newton theory. Maybe there is a condition where something happened and Bitcoin is supposed to respond in a different way. So far, we didn't see anything like that, because even COVID, you can almost think of COVID like a big, weird influence on the price. What it did, it dropped. When it arrived to that barrier, I showed this many times in a graph. There is that barrier that is the bottom, that is almost like impenetrable, and then it bounces. So that you could call it, in physics we call it a perturbation. So it was a perturbation of a system. The system responded, but then it went back to where it was before. So this will be the answer to your question. I think the power law was there from day one, in the sense that when you look at the theory, right, it basically says it was kind of a feedback loop where Satoshi started, he put it mostly human time and value and his intelligence, and that attracted other people in his circle. They started to put more energy, more time, and the value went up with that, right? So I don't know if you saw this video that my son made. If you didn't, I suggest you to go. I will put it in the chat as a link. But we do this analogy of basically we say, let's say $1 is 1 kilo, and then we say, oh, after a few hours, because so in the beginning was zero, the value was absolutely zero, and then within I think a few hours, I don't remember, like 10 hours, Bitcoin was the weight of an atom. So almost nothing, but something, right? And then after a few days, it was a mosquito. After this, so we have different things, first inanimated things, because, there is not an organism that was as small as an atom. But then it became like a cell, then it became like a mosquito. And you can actually go, because you can kind of see where it's, because one of the things we do, with the model, we use the Genesis block as our starting point. So in a sense, we are already including that, saying we are thinking that at the time zero, Bitcoin was zero. So if you look at that equation, that says price equal 10 to the minus 17 times the price to the power of 5.82. Well, when that days, right, the time days was zero, the price was zero. So in a sense, we are including that component, saying this equation needs to go to zero at time zero. That means the model is claiming that it was worth, that it was following the power law from the start. And the idea is that as time passed by, it was calling more and more resources, because it's basically a loop where as the value goes up, it attracts miners, right? The miners bring more stability to the system. That stability somehow is felt by the network, because people think, oh, okay, there are all these people mining and bringing resources and bringing their energy. One thing you do observe, though, is that the deviation from the trend, when they are there, in particular this bottom, very strong bottom that I mentioned before, is a little bit more violated early on. And that mostly because that very hard bottom comes from the miners now being profitable. But in the beginning, it was a little bit more flexible, because people were mining almost like a hobby. They were not really looking at how much energy they were consuming. They were not saying, oh, okay, I need to do this efficient. They were mining with their laptops, they were mining with their GPUs. So there was a point when, if you can look at the chart, I don't have it in front of me, but you can see that that very, very strong bottom maybe started right in 2011 or something like that. And then it was almost never violated. If it is violated very quickly, and then it comes back to that very hard bottom. But there was a little bit more of violation early on, when mining was not really professional. But in general, that is the idea that from the beginning, Bitcoin somehow follow these patterns. And what we are saying in the theory, they are due to two main things. One is the fact that it's a well, it's all due to the fact that Bitcoin is a network, and then there are two network property. One is this diffusion of like almost like a virus through the network. And I even did simulations where I actually simulated these like a little chicken wire. I made like an artificial chicken wire, and then I have a spreading point where there is like heat spreads, and there is an equation that tells you how fast the heat is spreading, and is involving more and more of intersections in this chicken wire. The intersection represents the Bitcoiners. Every time he hits a new intersection, is a new Bitcoiner, and it spreads exactly like what we are observing in the real data. I was able to simulate it without introducing power laws. That was the idea. I wanted to show that just by simulating a diffusion and interactions between these nodes, I will get something very close. And I have a graph, that I post often. But you can always go to my Medium. Everything is there. I had actually a discussion with ChatGPT about that. Like, look at this simulation. What do you think? And he's answering, and we're having a talk, so you can read that. But I have a graph where I show the simulation versus the real price, and they look like 1-to-1. It's crazy. And there are no power laws in that simulation that I introduced directly. Is all indirectly through these interactions. So the interactions is what they bring up the power law. It's just like a manifestation of the interactions. So when you have this interaction where the input becomes an output, the output becomes an input, and you have a loop like that, this is when you get power laws. So it's not like actually a surprise. It's like, what will you expect? It would have been weird if we didn't see power laws in Bitcoin, because it's full of these interactions between the users, the miners, the users, more users, more miners, more miners, more users, more users, more users, because, more of us, we infect more people with this idea, and so on and so on. This is exactly when you expect power laws, when you have these kind of processes. So it's incredible, But then, anyway, guys, let's focus on the coding. Thank you for your very nice questions. Usually we have this kind of question and answer discussions on Tuesdays when it's a little bit less informal. On Fridays, and I'm okay. I never turn down good questions, but we are a little bit more focused because we want to learn how to code. So let's go here. And so I want to give you, for the people that have not followed these classes, so we are learning how to use this code that is called Pinescript, because Pinescript is associated with TradingView, and we have all these nice indicators that we use in our Discord group. And so I want also to show you how to add your own indicator, because on top of the indicator we already use, maybe together, or maybe on the side, you want to have also other indicator. So part of what we are doing also in this code, we want to learn how to do our own indicators, and maybe eventually you can make a version of a power law, or maybe variations. I don't mind at all, actually. Then we can share them in the group, and we can work together in these kind of things. So it's more of us that know how to do these kind of things, better it is, because then we can help each other. But the idea is that if you have, I think this works only for the paid version, and it's not very much. And I really suggest you, if you want to make an investment, to get the paid version of TradingView. I'm very, very strong. And I said I want to ask them, because they actually even contact me on X, saying that I was a super user. I want to see if they give us like a group discount, because it's something that we can explore. Even a small discount will be cool. Maybe we have a referral link or something, and you guys can get a discount. I need to contact them and ask that, if we can get a discount as a group. But it's really not too much, and you don't have to get the fancy one. Even the lower version, I think, allows you to access the coding component. And so how you do it, you go here under Pine Editor, right? You click, it's kind of in the lower part of the trading viewer. You click on Pine Editor, and the beauty is that you can bring up like an indicator, like this one, right? So Bollinger Bands, you can say Bollinger Bands, and there are tons and tons of free indicators that other people did, right? So there are invite only that are basically you cannot access the code because it's it is proprietary, and you need maybe an invite, and maybe most of these invite are actually for people that are making a business out of this and they're selling them. We are doing it through our Patreon program, so it's much cheaper than the average TradingView indicator, because I'm actually subscribed to, I think, one. I didn't like another couple of others that I tried, but I'm subscribed to one, and I paid almost $30. It's nothing about Bitcoin. It's more about stocks, etc. And it's an okay one, but I'm paid $30 every month for that one. And so that is the typical price that we're asking. But when there are ton of them that are free, at a certain point we can do the same. We can put some free indicators, but I want to keep it mostly for the Discord community, because they're like more a focus group. But so if you go under some of these classic ones, right, that are some of the technical analysis. So most of these technical analysis indicators, they are not super good, in particular if you wanted to do like continuous trading, like on a daily basis or whatever. And they have all kind of limitations. Probably the Bollinger Bands are the best one, because they are kind of based on a real scientific idea that is, you can calculate it. You can calculate what is called a moving average, and then you're looking at deviations from that moving average. And we discussed all this last time, but we can kind of review a little bit. But again, to give you an overview, you can highlight. So when you call the indicator, right? So this is how you do it. You click here, say indicators, and then you can look at, you have your favorite technicals, right? Usually like very classical, in fact, even the Bollinger Bands here. And some of them are made by TradingView themselves, others by users, different users. And then, financials, we give you other data, etc. Community invite only. And so it's really cool. But you bring one of them, then they will appear superimpose. Right here, I have a Bitcoin price. Then superimpose. Sometimes they appear like in a panel below. It depends if it is like an oscillator, for example, where you see the deviation from, like we could do. We don't have it yet. I'm going to do it soon, like a deviation from the power law. For example, right? Let's say we had a nice indicator like that. Then you want to put it in the panel below, not superimpose. Superimpose is something that it will be maybe like a deviation, from like you want to visualize the deviation on top of the price, or maybe a moving average like here. And the beauty of this is that, first of all, you can turn it on and off, right, like this. If you don't want to see it, maybe it's cluttering your graph, so you can turn off indicators. And I'm sorry if this stuff is stuff that some people know about it, but I'm trying to give like a very fast review. You can click on the bolt. Sometimes there are like different parameters that you can adjust for your own use. So this you don't need to change the code. You can just simply change the parameters. You can change the style. Let's say you don't like the colors. You want to change the colors. You want to make one of a line thicker or whatever. Like let's say you wanted to make this line a little bit more thick. And I can choose this one, and it will make it. You can change the color, all kind of things like that. And then there is this thing that actually gives you the script itself. So you click on these parentheses, and you see how it says source code. So if you don't see it, means that the author kept it secret. They don't want to share it with you, because there are some scripts that are the author doesn't share the code, but they still make it available to everybody. And then there are the invite-only script that you need to get an invite and permission to actually access the code. But if you don't see these parentheses, it means that you can access it, but many of them, they allow you to see the code. And then you click on it, and here at the bottom, if you go under Pine Editor, you will see the code, okay? And then you can play with it. So, for example, you wanted to modify it like we were trying to do before. So you can click there, and you can say, whatever, my copy or whatever, Bollinger Band, we can call it class 2 or whatever, right? And then you will get a version that is your own version, and then you can play with it and you can modify it and can do all kinds of things. So if usually, then you will find, if you click the star, then you will find it under your favorite, and you should find it under personal. So if you go here, you see how open. I found it here, other that you worked. You can also create one completely from scratch, through new indicator, new strategy, new library, and that will allow you to create one completely from scratch. But let's say this is really what I suggest, because it's the easiest way to learn how to code, by looking at one that is already created. And you also can copy and paste. If you have ChatGPT, you can always copy and paste, and we can try to do that too, because I have a paid version, and I can show you how to use it. Let's say I copy and then go to ChatGPT, I paste it, and I say, hey, ChatGPT, if you have, I think you have some stuff even with the free version, but again, I've paid for few things. I'm trying to reduce all the useless expenses to a minimum, but I need to have my TradingView, I need to have my GPT-4, and few other important things like that, also because of what I'm doing in the media, etc., in the social media, to make graphs and all kind of stuff like that. And so I really love GPT-4 because if you do coding, it's like having an assistant. You have an assistant, and it can teach you how to code. It can help you with code. It can make, if you have you can start with a version that is created by GPT-4, and then you can add or subtract or make it better. It's so cool. So like really a companion. But we could copy and paste this one, and then say, hey, let's say we wanted to add other bands, right? So instead of having only 2 bands, we want to add 2 more. And then you can do that. You can say, can you add 2 more bands at 3 standard deviation instead of 2 standard deviation, or whatever, and very easily it will do that. And then you can add a small little section, that snippet. Sometimes you can even say, just give me the snippet, and then you can add it to the code. Or you can say, please rewrite the entire code, adding that component, and then you can copy and paste it, and now you have the modified version of your Bollinger Band. But to give you an idea of how this code works, there is always like some kind of initial, this is where you start, right? This is how, and every code, right? If you're not familiar with coding, it's almost like learning a new language, right? So we have their own structure, we have their own way of being organized, and so you get familiar with it, right? And again, in the beginning, it's a little overwhelming because you never saw anything like this. What does it mean? Seems confusing, but with time you get used to it, right? So, for example, what is typical with these Pinescripts, they always start like this. We need to know if you're doing a strategy. So, if, for example, it was a strategy, and sometime maybe in the next lessons we can look at the strategy. So we can, for example, modify these indicator to be a strategy. Strategy means you give it some rule on what to do, like I want to sell at this point, I want to buy at this point, and then it will kind of mark on the chart where you did your buying, where you did your selling, and then there are things that you can modify in terms of, okay, I want every time I buy or sell, I want to sell everything, buy everything back, or you can say I just want to use a few contracts, right? So if you're buying Bitcoin, I just want to buy and sell 2 Bitcoins, and I have a budget of 500,000, but I keep this 500,000, but every time you do a trade, they do it with 2 Bitcoins. And so there are different modifications of that. And then you can run it over a certain period of time. Again, if you have a paid version, it does what is called deep back testing. So you can go pretty much, like a couple of years back or even more, and say, okay, do an analysis of what will happen if I follow this strategy over this period of time. And it gives you all the trades, it gives you, and you can add, for example, fees if you wanted to, or maybe even slippage, like I didn't get exactly the price I wanted, but I got it within a certain percentage. It's really, really cool tool that we have available. So we can play with that. In fact, we can even try some strategy based on the power law and run it and say, okay, what if I sold at this number of deviations? What if I bought it back? And we can see how it performs. Okay, so this is one of the things we can do in the next meetings. I wanted to start with something simple that didn't involve the power law. But then in the next few lessons, we can look at a simple model where we use the power law. And we can even do a strategy based on the power law. So you can see with your own eyes that it actually works, But this is why we start with the Bollinger Bands, because it's so easy and well known. It's a classic, And then once we get familiar with these, we can try the power law. But it always starts like this, where it says, okay, it's a strategy or an indicator. An indicator, it only shows the indicator without the strategy. A strategy, it will basically be both the indicator and the strategy. So basically, when you want to sell it and buy it, and so on. And you can also, there is another option where you can write what is basically what in other code will be called a function, but here we call it like a library. Basically, will be, let's say that you have a task that you want to repeat over and over again. You assign it to this kind of module, like a separate module. Like I say, many different code is called a function. You send, like you have an input and you want an output, and you want to kind of separate this routine that you're doing over and over again, like in a module. So you basically give an input to this function. All what you have to write in the code is the name of the function, the input, then it gives you an output. And then you use the output to do the next operation in the code, and so on. That is called a library here. So these are the 3 things that you can do. It's expecting this syntax, and then you can put like a short title. This basically the short title is what will appear here, like just to know if you have many different indicators, which one is which. This longer title will be what what will appear when you're looking at the graph itself, right? Here overlay true is there are 2 options. It can be true or false. If it is true, basically it appears on top of the price. If it is false, it becomes a new panel below. And you can have several panels, right? So you can compare different indicators. But basically, having a second panel usually is when you have like some kind of things that will not look good superimposed, maybe like a deviation from a trend or whatever. The time frame you don't have. So when you have syntax like this, there are things that are mandatory and things that are not. Like this time frame, you can avoid it. But in this case, basically they say, see how there is an empty space. It means basically whatever I'm choosing here, if I'm choosing a day, I'm choosing hours or whatever, that would be your time frame. There are some applications where you want to fix it, from the start. They say, I want just this indicator needs to work only with days, and not with hours, etc. So you could specify it here. In time frame gaps. I think what happens, right? There are some assets like they are traded over a certain period of time. Like for example, stocks are only traded when New York. Let's say you have an American stock, that is only traded during the open hours of the market, right? Between 9:30 a.m. all the way to 4 p.m. New York time. And then the market closes. So if you show these, it will look, you can have two options. You can have gaps, where you will see a literal gap when the market is closed, and then it will continue to move in that way when the bear market opens. If you say false, it will glue these gaps. So where basically the data continues to when stops when the market close, and then there will be a continuation. And sometimes it looks funny because if it was activity, there are people that are trading futures and other things that can be traded after the market closes, they can move the price. And so when the price restarts, it can look like there is a jump, but if you say true, then you just see the gap, and then you will still see the jump, but it will not be immediately after the price at closing. It will be, sometime later. But with Bitcoin, we don't have to worry because there are no these gaps. It's 24-hour trading, and 7 days a week, and there are no holidays. It's always working. One of the few assets that can do that. And then here, so this is a typical way of setting up variables. So these will be variables when you write it in this way. So it will be some quantity, and you give it a name. These names are completely arbitrary. It's up to you how to call them. Usually we want to call them with names that mean something, that are easy to remember, or it's evident what we are talking about. Now this length, it's not perfect. Like, there are some computer scientists that are trained to write really good name, maybe also because they are preparing a code for somebody else to use. Like I'm very bad with that. Like I make up stupid names, for things like P1, D3, and they make sense to me, but a real professional coder that I am not, because I'm a physicist that knows how to code. Every physicist knows how to code because we do it all the time. But I was never trained formally. I mostly learned by myself, and so my way of doing it will be despised by a real professional coder. But here would have been better to say maybe length of a moving average, right? Underscore moving average, and you can call it whatever you want. But they wanted to maybe make it short because it's okay, right? We know what we're talking about. So it needs to be like maybe a compromise between something that is understandable and so, for you, and if it's something that other people use, also for other people. But if it is too complicated and long, then also it's a problem. So like always, compromises and the middle ground is the best thing. But you want to so this, what is the function of this? It's basically you are creating a bunch of variables that are going to be important for what you're doing. So remember what this Bollinger Band is, for people who never heard about. So Bollinger is, I don't remember exactly when and who, but some guy that invented this indicator, and this is why it's named after him. But I know what it does. So it's creating a moving average that is basically a moving average. Yeah, you're looking, everything in TradingView is based on these bars. Bars are basically the data. So there are 4 pieces of data. There is the opening, the close, the high, and the low. So there are 4 pieces of data that make a bar. And you can visualize it literally like a bar, because so these are, if you're not familiar with TradingView, there are all kinds of different functions here. So you can go, for example, under bars. It will show you these, where basically it's like a little bar, literally, and you can see the red ones and the green ones. Again, if you don't mind me to give you like a little review or introduction, it is green when, so what are open, low, close. With Bitcoin, it's 24 hours trading, so we're using the Greenwich time, right? The international time. So anytime, every time we go through that international time, a new bar starts. So whatever the price was at that particular time, GMT time, that will be your opening, and then the closing. It's actually, so the new bar will have the opening of that time, but it's also the closing of the previous bar, right? That particular price. And it continues like that. And then during that 24 hours, if you're using a bar that is long 24 hours, the bar can be 1 hour, can be 1 second. Okay. So you decide which time frame you want to look at by clicking these, right? You see, you have all these choices. You can even go to seconds if you wanted to. But usually with Bitcoin, we work with days. This is type of scale that we are playing with, and most of the time in our Discord channel when we look at the indicators and so on. And then in this representation, this lower little thing here will represent, that little horizontal line will represent the opening. The other one represents the closing. And if the opening is lower than the close price, the bar is color green because it went up, right? It was a gain, and so it's color green. And the other little things that go beyond this little horizontal line are the lowest price, because you open there, but during the day somehow the price went lower, so you represent it like that with a little extension. And it also went higher, and so it will be like a little line above that horizontal line. I don't like this thing in particular. I rather have candles, and it's basically the same thing, but now we are drawn in this way, where you have like a little bar, right, a little rectangle, and then the low and high represents, they're called wicks, by these little wicks, by this little vertical line that go above or below the bar. But it's the same principle. And you have different variations. There are the Akinashi. I never remember. There is like basically a rule. I love these Akinashi ones. If I had to choose among all the different bars, what there is a particular formula. Maybe somebody of you knows. I never memorized these kind of things. I know where to look it up, right? So we can look it up. We can go Akinashi and see what is the rule. But basically, the bottom line is that we are using past information. I don't remember if it is the previous day or something like that, where if there is a continuation of the action in one direction or the other, like if the price continues to go up, etc., they tend to color similar actions, right? So if there is a tendency for the price during the period to go up, they color all these bar green. So it's basically kind of like a momentum indicator in itself, right? The only problem with that, if you are trying to do, so it doesn't really give you the real close and the real open. It's close enough to be the real one, but because of this manipulation of the data, it's related to the real close and the real open, but it's not exactly, right? So you have to be a little bit careful when you're using them, in particular if you're trying to do like a back test, because many times if you do a back test using these candles, you will get very optimistic results that are not real, because they are based on this manipulation of the data. It's not like you will not be able to do a trade based on future information, right? You can do just with past information. And I think here is including, when it's coloring this bar, is including also what you're doing in the next bar, and so it's useful to kind of tell you there is a trend, right? So like here it looks like, oh, okay, we are going down, right? Here we are going up, and so on. And some traders like it because it gives you some extra information. But again, you have to be careful in how you're using. Many times maybe it's nice to have like a couple of charts open, one with one type of bar and one with another type of bar. But yeah, and then you can go simple if you like simple, and you can just have a line, for example, and you don't have to worry. And the line usually uses close, but you could tell it to use open, but it's traditional to use close, the closing price. Anyway, so do you have any questions about these things that I'm mentioning right now? Anybody? Any question about this information? Okay. Yeah, so these are the different things. And then if we go back to the code, we have so these are the inputs that I was mentioning, right? So in this case, we are working with a line, so it's simpler. And the moving average that we are visualizing here is basically, in this case, we will not worry about all this other information about the open, the close, the high and low. We're all interested on the close. So you're looking at an interval of time from each bar, and each bar, remember, represents a day if we are working under the day time frame. And so I'm going back in time a certain number of days, and that is specified by this window, by this length. Length here, or length is meant the window length. This is how you call it, a window. And so you go back in time by 20. That is also kind of there is no reason why we should not use 21 or 19 or 18, but it's traditional for the Bollinger Band to use 20. But it's something that you could change. Maybe you want to have it shorter, maybe you want longer. So it depends on what you're doing. But here, basically, I'm trying to set it up as an input. And the reason is that if I do it in this way, then when I look at my little bolt here, it will appear here under inputs. So you see how there's like a little spot, a little place where you can actually play with these. And because now you're setting it up as an input, you can change it. You can choose 19, you can change 20. You see how it changes on the graph, right? If I make it longer or shorter, it's automatically changing the shape of the graph, right? If I make it longer or shorter. Or you can even input a value, right? You can put 5 and then you press enter and you see it changes immediately, right? So this will allow you to interact with your indicator using these variables as inputs. So length is one, right? We see that there are all these ones, all these variables. You can have as many as you want, but in this case, we have 5 of them. And so this is how you set them up. Usually is on top of your code. You're going up all the way under this indicator, right? So you will put all your variable there, and we have this structure where you say input, and then the type of data that you're dealing with. In this case, we are dealing with an integer, so it will be input.int. And how do you know that it needs to find that, get this structure? Again, you can open a book where it guides you step by step. It gives you an introduction, this topic. Nowadays, everybody is using manuals online or videos or instruction like this. The way I learn, I want to look at an example. I get an idea. Okay, it looks like we are doing something here, right? So this is how you get used to it. Basically, it's like if you learn a language, you go in a foreign country. Okay, how do you call this? Oh, okay, cap. Okay, cap. And you repeat it a few times, and little by little you get used. You build the vocabulary, and then it makes sense. This is the suggestion of it. I tell you, if you put this under ChatGPT and you ask, can you comment line by line? Right, another thing you can do, you can say, can you explain me line by line what the code is doing and why it's doing it? It will do that for you. It's that amazing. Okay, and we can test it another time. But basically, this is one of the first things to learn, that there are these inputs that you can set up. And you don't have to, it's not a requirement to do .int, but it's a good thing, because if you do it in that way, then when you go and input the value, if you're putting something else, you're trying to put something with like 20 point something, so integer means it is an integer, right? 20, 21, 22, like a whole number. If you're trying to put something with a fraction, right, a decimal place, it will not accept it. So it's a way of forcing the user to use only integer. And because we are talking about a moving average based on bars, you cannot have half of a bar, right? So it makes no sense to have something that is not an integer as the length of your moving average. And also, you can add, it's not mandatory, but if you, let's say you wanted to have a minimum value, because it doesn't make sense to have a 0 bar or minus 1 bar, right? So a negative integer, but negative, it makes no sense for a bar. You do this. Say it's okay, it's okay. You can give me any upper value, 100, 200, but you cannot give me a value less than 1. So again, when you're trying to input a negative number or even 0, it will not allow you if you do it in that way. You can always go and in your in your Google, and you say input Pinescript, and then something will happen, where you can go here, manual, you go under the manual, see, and there is everything you wanted to ever know about these inputs, and it will tell you. So for example, here you see how they have an example similar to ours, where they didn't specify .int. So it's not necessary, but if you do it, then like I say, because here you have a risk of somebody or you putting 20.5, it will still mess up, and probably, I don't know what will happen. We can test it, but you will get in trouble, but maybe it's not so big of a trouble. But by putting that int, you force people to use only integers, right? And you it goes on, and you can see right all the different types that you have: integer, float, bool. So it depends on which type of variable it is. It is an integer, is a float. Float means basically any number. It can be positive, negative. You can have a integer, it can have decimal places. Bool, if you have something that is logic, like if it is and or not, like a decision, kind of a decision. If this happens, don't do this, right? This is called a Boolean algebra. Color, string, if it is like a name, like we will see in a moment, we have actually an input that is a string, a time frame, symbol, price, many different things. And you can click and see what they do and what they are supposed to be. So it's very cool, you have all these things. And here, you see, for example, we have a string. In this case, basically, we are choosing. And by the way, this value that you put there, it's what is called the default value. So it will give you like a default value. In this case, 20. But you can change, right? But if a person doesn't interact with it, where they just go straight and use the indicator, they will use this default value. And in this case, in the second command here, is the type of average that we want to use. And so you have all these choices here. You have five choices, and it will be structured in this way, where it's going to be just a string. Means it's a bunch of letters or symbols, and the code is not going to do anything with it. It's not going to sum it or multiplying it or whatever. It's going to take that piece of information, and usually is going to maybe do a decision based on that. It's going to interpret, like for example, here we're going to see later, according to the type of string that you're choosing, is going to choose some particular type of average, different type of averages. And again, but the structure is similar, right? You will have a default value that in this case means simple moving average. This is what this SMA means. And here you see you are giving a name to what is this thing. It's called the basis MAT type, right? The moving average type that you're choosing. And then as you have a common, and then you put a bunch of options. So this will be, if you go back to the indicator, you see how there is a, basically we create kind of a drop menu where all your choices are there. Because you set it up in this way, it will look like, instead of the user writing some random string there, you can only choose these options here among these options. So you're creating like a drop menu that the person, the user can choose. It's really cool, right? All these different things that you can do with the code. Going back to what the moving average does, right? You take these points back in time, like in this case 20 or whatever the user chooses, and then you just average them, right? So every bar you look at the past 20 dots, you calculate this value. An average, like everybody knows, is simply summing all these values and divided by the number of values you have, and you get, for each bar you get one number, and that number is represented by this orange line. And you can see what an average is supposed to do is kind of go through the middle of these data points. Now, averages, and I don't know if you know all these kind of things, but I'm trying to give you all this information based on my experience, etc., are always delayed, right? And longer. So you see how, for example, here the price is moving down, right, in this place, but the average is lagging, so it doesn't know yet, right? And so it's not really following yet. It's starting to go down here, right? So here is already moving down, the price is already moving down, but the average is lagging because remember, it's looking at all the data point from the past. So the majority of the data point from the past were higher than this value here. So it's going to take some time to catch up. Now, notice what happened if I change the value of the length, right? So let's say we make it smaller, like 3 data points. You see how it's catching up faster, right? It's following closer the price. So it depends on which application you want to do. Maybe sometime you want to follow the price more closely. It's going always to be delayed, because it's only based, these are how trading data are, right? You cannot use future information. You can only use past information, because it would be amazing if we could use. You will become like the richest man on earth. Sometime when I was coding by mistake, sometimes that is one of the biggest mistakes when you're coding outside PineView. One of the beautiful things about PineView, it is almost impossible to introduce future data. It's all based on current or past data. But when you do it with MATLAB or some other algorithm outside, right, you download the data that you want to analyze, and you want to, offline, right, because maybe you want to test a strategy, etc. So you have both future and past data, right? Of course, if you're running live, you're not going to have future data. But if you're trying to test some techniques or some approach or whatever, you have all about past and future. And by you try. That is one of like algorithm trading 101. Never introduce future data. And if you do it by mistake for whatever reason, because when you write a code, you're thinking you're only using past data, but by mistake you introduce some little information from the future. It could be even indirect information or whatever. And you run the back testing, you get this crazy result. Like, whoa, this thing is amazing. I discovered like the most amazing trading algorithm in the world. And if it is too amazing, probably you introduce some future information. And it's amazing, even like in very, very indirect, like a variable that depends by another variable, even another variable, even like 3, 4, 5 steps removed. But it has a little bit of future information. You make a ton of money. It's like, I wish we knew even a little bit. This is why if you do have something that somehow statistically is a predictor, even a little bit of advantage, when you compound it, it's really powerful. It's really, really powerful. But you see, this moving average, is going to follow the price more closely. If the window is small, if you make it really big, it's going to be less affected, right? So see how it doesn't matter if the price really dips, it continues to do its own thing, right? It's the general trend over a very long period of time. It's smoother. But averages, moving averages are always delayed. This is why sometimes people mention this pi indicator that everybody seems to like. It's a cool one, but it's still a moving average. It's two moving averages. They don't predict anything. They react. Maybe they are good in terms of the prices of Bitcoin is going very fast down. At the peak, and then the choice of moving window for that indicator is such that it can catch when the price is falling down, but it's going always to be reactive. It's never predictive. Moving average cannot be predictive by their nature. We can go for another 5-10 minutes, and then we can continue next time. But so here, see, I put all my different inputs. This is a string I created through these options, with this kind of syntax. You have to follow that syntax, right? So if you study these inputs, there will be a section in the manual. I can show you how to get the manual that will explain you this idea that you can create some kind of like a drop menu. But you have to follow what is called the syntax, which tell you, okay, open a square parenthesis. If you open a round parenthesis, it will complain. So codes are very, very, see, that it will complain. So I did that because I put it inside the quote marks. It needs to be outside like this. And then you put your choices separated by comma. If you put a semicolon, it will complain. So you have to follow very, very precisely what is called the syntax. That is how it wants it. It wants it to be little string like this, and they have to be separated by a comma, and you need to open it with a parenthesis, a square parenthesis, close the square parenthesis. If you do something different, it will show an error. These are called bugs. And then here you see the source. The source is, okay, what will be my input for this Fibonacci? You could use open. You could use an average between open and close. If I did that, I would say, hey, I want close plus open. Show you what you will do. And then you want to divide by 2, right? That will give you an average between close and open. I know, maybe let's do that. Let's see how it changes. So the way if you do a change, then you want to go under save, you say save, right? And if you didn't do any error, I see a little thing. What is here? Why is complaining? It says arguments of input function must be constant type source. Why is complaining? Why doesn't like that? Maybe you cannot do like this. I don't know. I don't know why it's complaining. I thought you could do that. Maybe let's see if we can do it in this way. Let's say source open plus close. And we do 2. Okay, and then we go here source. I don't know if it likes this. Let's see. It still doesn't like it. Okay, I will research it, and maybe just once open close. There are some options where let's see. I think we can do. Let's see if he likes these. See. Okay, no, doesn't like this. There is a way of telling that you want an average between close. I don't remember what is the exact value. Source Pinescript. Okay, you see there is all this combination, source input, close. So let's click on this. Yeah, so in this case, it will be high, low, and it's giving 2 here means it's going to give a low value of 2. So it's going to be stronger for the low than high. So it's giving more weight to the low. And there are different combinations. I don't know if there is a combination. Let's see. I wish we could open concepts. Okay. So there is a list of all the different combination. Okay, high, low, close. I don't see a combination where you have an average between open and close. See, high, low, close, they divide by 3. Okay, this is what it means. High, low, divide by 2. Okay, fine. Yes. So I was incorrect before. I was thinking that it was giving 2 times the value to low, but actually here is simply an average. High, low, and divide by 2. High, low, close, divide by 3. This is what this means. And here you're taking open, high, low, and close, divide by 4, and so on. In this case, yeah, this is how you do if you want to give more weight to something, like high, low, close, close. You have to close 2 times. So in this case, you don't have open at all, and you're giving 2 times more value to close than high and low. Again, I don't know why will you want to use that. I cannot think of an application, but it gives you the freedom to do that if you need it. So it's really cool. I wish we had a simple average, but there is a way of doing that if you need it. Just I'm a little stupid right now. I'm not thinking, but it's expecting close one of these combinations. But in theory, you could define these. You could define another one. Let's see. Maybe we could do it like this, right? We could define another one that is only open. Okay, and we can call it source. You can call it source 2. And then let's give it another name. This is source 1, source 2. And then we can have source equal open parenthesis source 1. This should work. Let's see if this works. And then you divide it by 2, right? Let's see if this works. Yeah, it didn't complain this time. Okay, and now you have an average between these two, right? So you will do. It doesn't like it as an input directly, or as a yeah, because you're making it an input. So when you give a choice to the person, and so now if this is how it will look like, right? If we go under the bolt, see here, it only is looking. These are the only option you have. It doesn't allow you to have a open close combination. So you will have to present it as a and why didn't show me the second option? Let me see. Source input should show us. Am I open? You know what? I'm not now opening this one. It's like actually the default one. Let me open this one. Okay. Favorite. Bollinger. Yeah. Okay. Because I was hoping I was opening the one that I use to start with. Okay, see now we have two, right? We have source one, source two, so you could choose anything, and then it will give you an average between these two, so open and close, But now you have both sources, and in the code you mix them together. If there was a meaning to do that, right? If there is, kind of looks nice, but maybe there is a reason why you want to do that, right? And so this is how it goes, right? You have all your inputs here, all the things that are necessary. So we have a type of moving average. We discussed last time the different types that you can have. You can have a simple, where you just do a simple average. You can have exponential. You can have a weighted average, and all kind of interesting things. And here you have the other critical thing when you have a Bollinger Band, that are the deviations, right? So these bands, the idea is that it's more and more difficult to get data points that are really large deviations from the moving average, because the moving average is supposed to represent the general trend. The theory behind the Bollinger Band is if you go too far away from the trend, you will go back, right? It's called mean reversal. So if you go too far away in either direction, too far away in the sense that you are higher than the moving average, or too far away because you are lower, then you will tend sooner or later. That is the problem with this approach, right? How far do you need to be before you go back? How long it will take you to actually try to go back? But in theory, statistically, you should try to do that, right? So you could try to base a strategy on this idea that you're going too far away from the trend, and then this is a good time to sell, this is a good time to buy. It doesn't kind of works, and you have to be careful, and there are things that you can do to improve on the Bollinger Band. If you just follow it blindly like that, it doesn't really work over the long term. It's not like the best, but it's a starting point for maybe making a more sophisticated trading approach. But it's a good way. It still helps you a little bit, like in particular if you want to look at Bitcoin price. Okay, how far we are? This looks like a general trend, right? But we can try to make it specific to Bitcoin, like things that maybe we can use. Eventually we can make maybe a Bollinger Band based on the power law. Like it's instead of using the this is what in a sense is when we're looking at this deviation, right? And so we can try that, right? We look at the power law, and then we're looking at one standard deviation based on a moving average, moving window. Maybe we can make a window bigger. So that will be kind of almost like an adaptive power law, at least in terms of the deviations, right? So we can build towards that. So we can start with an example like this, and then we can use the knowledge from the power law to modify. So this is what we will do in the next meetings. But we can kind of finish here. There is this a little bit more complicated step where basically the code tries to make a choice based on the choice of a user in terms of the different options. So basically, here this will be called again a function. You can have a function as a separate module, or it can be inside the code. So in this case, this function is like a little component, something that it's isolated a little bit. And how it works is basically it has a name for the function, in this case, moving average, MA. It needs some inputs. In this case, it wants to know the source, it wants to know the length of the window, and the type. So you put in these three type of information, and you see this little arrow say, okay, then does that. That is the syntax for a function. It's a name, some kind of open parentheses where you put all your inputs, and then the little arrow says, okay, now do these operations. And in this case, basically there is this command called switch type, where it's looking for the type that is here is the this little string, right? So it's looking at which string you use as an input, and then it goes through all of them. And if the particular one that you've chosen, like for example, the simple moving average, and again, a little arrow that tells, okay, do that, right? So basically do this operation that is TA. So in this latest version of Pinescript, you need to specify what you're trying to do. Are you trying to use some math? Are you doing some technical analysis? And then there are some built-in functions that are built in Pinescript. Somebody else did already a little piece of code, these little modules to do certain things. And so again, you will have to go under the manual to look at all the different things that you can do, like under TA. In this case, for example, different type of moving average, right? So you can do a simple moving average, an exponential moving average, and the syntax goes like that. You have to say it's a TA, so a TA type of function, and then dot, and then the type of thing that you want to do. Sometimes if you hover here, let's see if it works. It will give you like a long list. Let me see if it works like that. Sometimes it does, sometimes it doesn't. Okay. Maybe I have to do dot. Yeah, you see, if I do dot and I don't write yet what I want, and you have a long list. Like these are all the different things you can do under TA. You can do lowest, you can do max, you can do median, mode, and among them there are also these moving up, the standard deviation, different type of moving average, more sophisticated ones, right? And then there is among them there are also SMA, right? So this is a weighted one, SMA. You can click on it and it goes there, right? And it gives you an open parenthesis, but we already have them, so we delete them. And that will be the syntax. Okay, it wants a source, it wants a length, right? So it wants to know what is the source. In this case, the source, it's like the input here, right? And so you see when I call it, so it's looking for a source, it's looking for the length. Did we? Oh, yeah, because it's being called. So this is, let me explain this and then we can conclude here. See, this is the function. The function is expecting this type of input. And so this name here can be anything you want. And usually by tradition, it's slightly different from when you're actually going to call the function, because this is kind of a generic name for what it's looking for. It's looking for a source. And then it will be also better to make this like a general name, instead of making the same name, but we're going to use it when you're going to call that function, because it's basically a generic name for what is expecting there, but it can be also the same. So it's a little confusing. Whoever wrote this code, and just pick it up. Probably it's better to be consistent. Or I make all these guys different from when I call the function, or not. So, but here is doing a mixed job. But let's keep it like this, and then see, expecting also some type. So in this case, he brought it as underscore type. Now all these names, of course, will have been consistent here inside the function, right? You want to use the same terms, the same names that you use here in the format of this function, okay? And then whatever you're doing inside the function needs to have the same name. But you see how I call the function here? So you create a function that is supposed to do a particular task, and then you can call it sometimes many times, right? So let's say that I wanted to do this more than one time. I can always simply invoke that function. It's almost like you're calling it, right? Say, hey, come here, do this, right? And is what is expecting is, in terms of how you call the function, is the name of the function and then the inputs. But you see here, it's giving as an input something that you calculate somewhere else, right? So here is like this generic term for what is expecting. This is a specific type of input. Of course, it needs to be of that type, but we know we created this variable here that was the average between these two inputs, right? And we are feeding it to the input to the function here. And like I say, it's probably better to keep these names, like the specific input, because, let's say I call another time this moving average, right? Maybe I create two moving average, one basis and another one that is on top of it, and then I want to plot both of them. And we can do that next time. And and now I'm putting only source one as my input. So you see how it's important to keep these separate. This will be the general form. Is always work looking for some type of source. But when you're specifically creating a particular type of some other type of variable based on that function, you're going to give a specific input. It will be clear next time when I want to kind of end here. Otherwise, we go too far in the lecture. But you understand what I'm trying to say here is will be a specific type of input, and this is the general input that this function is looking for. It wants a source here, it wants a length for the moving average. Here, because length is both a general name but also a specific name, it's a little confusing. So maybe next time we should modify to make this. When you need to, in fact, let's do it now. You will say moving average, right? So it becomes like a general name for what is looking for. But I will have to be sure that I modified everywhere here to be consistent, right? And so now I think I like it better because we are keeping the name for the general type of input for this function, and then the specific, because here length is a specific one. Imagine I created another length, because it's maybe length one for, I have two moving averages for whatever reason, and one is length for moving average one, length for moving average two. And so when I give it as an input, it will not be length, it will be length one or length two. It depends on which one I'm creating a particular point. But the general function, it doesn't care. You give it an input and it spits out output. In this case, the output will be this, will be the basis, right? So we'll give you the calculation that is happening here. We'll give it as an output, and then this basis became the output. The basis here is basically the moving average that we are visualizing here in orange, right? And then in the end of the code, we are plotting it. You see how I'm plotting the basis here, and I specify the color and all kind of stuff like that. Anyway, so we can stop here and we can continue these next time. Anybody has any questions? Anybody that wants to ask a question can do it by speaking, because you're allowed to speak, or you can write in the chat if you don't want to speak. Do you have any questions or any doubt or anything that you didn't understand you want me to explain again? Or it's clear enough? And we are in YouTube, so I can also check if anybody's saying anything on. Does it make sense though? Let me ask you a question. Does it make sense what we're talking about? Do you start to understand a little bit what is going on? Yeah, and we are using this. This is a very classical indicator, Bollinger Bands, that many traders use all the time, because, again, what will be an application, right? Just to give you an idea. You see how, for example, here we are going a little bit away from, see, the idea will be, this is how will you use this indicator, the idea behind the indicator. And this is why no indicator works perfectly, because the idea could be good, but then the actual practice is not that simple. But in general, the idea will be, if a price goes above the blue line, because the blue line represents two standard deviations. So the idea is that the data is distributed, right? Most of the data is along the average. When as you go farther and farther away on both sides, you will have rarer and rarer events, right? Like the bell curve. Yeah, you get that, right? And the idea will be, if there is a very, very large deviation, it's so large that it wants a correction, a correction is going to happen. So the price is going to go back to the average, right? So that will be a good place where to sell. And the other way around, and so you can see like where do we have an example here? Well, here, right? So you see how the price went above the blue line. So the blue line will be the average. Like we didn't define it yet, but next time we are going to see. You can see it here. It's kind of defined here, right? You see how I take the basis, I calculate the standard deviation. The standard deviation is the average change, the average distance of all the points from the average. And so you can say, I want one standard deviation, I want two standard deviation. In this case, because dev is some multiple, you see here, and the user was defining the multiple. We can go where the multiple, you see how the default value is 2, but you can make it 3, whatever you want. But in this case, the default is 2. So multiple times standard deviation. So 2 times the average. So in theory, one standard deviation, if a distribution was a bell curve, 2 standard deviation means something like close to 92%. Somebody can correct me, but I'm trying to use my memory. I think 2 standard deviation is, we can look it up. Let's look it up. 2 standard deviation, but that under the condition that we are dealing with, 95%. You see here, you see this how it looks like. You probably see this, right? So this is the bell curve. The mean will be there. You go 1 standard deviation, it's about 68%. And there is a calculation. Standard deviation means you take 1 point, you subtract it from the mean, you take the square, it's basically like an average distance of every point from the average. But many times these financial dates are not a bell curve. They don't look like a bell curve. They look like, like one of the sides is much bigger, or they have long tails. But, it's an approximation. So you are working under this assumption that you're dealing with something that looks like a bell curve. But the idea is that farther and farther you go, more likely is that all the data fall within this range. By the time you go 2 standard deviation, you get about 95%. 3 standard deviation, 97%. So more and more standard deviation, more unlikely is that there is some data outside, right? And so if you go back to this is how it works, right? So if you go back to our standard deviation, we have 2 standard deviation because this is how we define them. So first we calculated the basis the moving average. We had 1 dev, but 1 dev here means multiplied, though, right? So 1 standard deviation is 2 standard because there is this molt here, minus, so you add it and you subtract it. So you're looking at the point below and above, right? Basically in that range. It's kind of a visualization of that bell curve, right? You can look at, you're looking at from above, you're looking at the bell curve, right? Every time you're looking at the bell curve. It's just that it's like sometimes it's larger, sometimes smaller, because it depends on how the data is, the volatility of the data. If there is a lot of volatility, these bands were going to be very, very broad. If the volatility is small, because remember, we are calculating everything within this little window, right, of 20 data points, right? And so both the moving average and also the standard deviation is calculating that small little window. And it's nice because it's a kind of a dynamic way of showing the bell curve, right? You're looking it from above. Imagine you're looking at from above, and then I'm kind of marking where the middle is and where these 2 standard deviation are, right? And so what does it mean? Points that are away outside the band are very unlikely points. They are not supposed to be there. It's like the price moved very much away from the average. And the theory is simply because this is what an average is, right? That eventually will not be an average if a point didn't go back kind of to the average, right? And so the theory is we are so far away that we are very likely is going to go back. And if you look at here, this example here, right? So we have this example here, and the example here shows both why it's kind of good idea and a bad idea at the same time. It's a good idea because yes, we are so far away, we are outside the blue curve, but in theory, this could be a good place where to sell, right? You could say, and there are different ways, like it's usually not a good idea to sell when you just cross it. You want to let it go, then maybe when it comes back, definitely, right? So in this case, here kind of touch it, but when it comes back towards the mean, so it crosses again, and again, you can use all this TA crossover, like next time we can check that, right? When we make it into a strategy, we can see how we can tell the code when to act. But in this case, you could say act when, give me a signal when you cross above, and right, use this if and, this is how you do coding. Coding has all this decision making that the code is going to do automatically, but you tell it, I want you to check for the price to go above this blue line. Next time we make this into a strategy, so I will show you how to do that. You give it two commands. You say, hey, first look at the first time when the price goes above a blue line. This, we gave it a name, right? And so when it goes above that blue line, be alerted. And then when it is above a blue line, but then it comes back to it, right, crosses again, I want to sell there. So let's say you sold here. It's not bad, right? Because it was, kind of above the average, right? But it would have been better to sell there, of course, right? So this is why you see it's limited, because it kind of got it right, but it could be that the price continues to go up, right? It didn't go. It started to go here. So it's not going to be perfect, right? It's kind of an okay idea, but sometimes it doesn't work. Here it kind of worked, but there are times where it really doesn't work, and I can show you some other example. But it's kind of rough approach, like an idea that you have, like say, okay, what about this moving average? It's a classical idea. People tried, it's kind of almost a natural thing that you want to do, but this is why it's not going to make you rich, because there are many times when it doesn't work. And of course, here the same thing here, right? You see, this will have been kind of okay place where to sell, right? Because it went below and then it crossed again, like, oh, okay, I'm not sure what I want to do, so probably will have waited, and then, okay, maybe when there is like a clear crossing of a blue line to go towards the mean, you sell there. Okay, these two worked, right? You sold here, but if you actually compare it, if you sold here and then bought it here, you will not have done so well, right? Because there is no big, huge difference, just a little bit. But other time it works better, right? For example, if you bought here, right, this will have been a good place where to buy, right, when it crossed here again. So in general, it's not a bad indicator. It's just that if you look at, like, the next time we will see, if we make it into a strategy and you see how many times this thing is correct, it's not going to be much chance, if you focus on certain, because human eyes are good in picking what they like, right? Oh, I see here, look, oh, here seemed very nice, here seemed very nice, but then I don't look at all the time where it actually messed up, right? Where it was not so good. This is why, like I said, people talk about Bollinger Bands, and there are some people that have done modifications. They are set, like, for example, if the price is going up and up, 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 it's pretty good idea to buy every time you get a signal below the average, because it's probably that is a good dip, but it's not very good in picking up the tops, and vice versa. If the price is going down, then you can use it to pick up tops, because you could, so if there is a general trend, you can use the Bollinger Bands in a very effective way. But again, if a trend changes, then you could get locked into a trade that you committed, and you can get really beaten up by that. So you have to be careful. But the reason why you're using these versus something better is mostly for educational purpose. I'm trying to show how to code, how to set it up, because eventually we will learn how to do it with the power law, and then you can use that indicator we are building together to do your trading, or as an additional thing. But the entire idea is I want to show you something like you learn a new skill, how to code. You say you didn't know, but now you have a general idea of how to do it, and the idea is that you don't even need to completely learn every single detail. But like, for example, saving phase is an amazing example of that, because from what I understood and what he told me, he's not here with us, he's a very good coder. Sorry, he's not a good coder. He knows a little bit about coding, but not too much. But he does all this beautiful modification of our indicators, because he takes the code, he modifies, he plays. Many times you just have to dive, like when probably how to speak more than one language, and so how it goes, right? If you are too afraid about making a mistake when you learn a language, you will never learn how to speak a language, right? The first time you make all kinds of different grammatical mistakes, and you just have to dive in, and so this is how you do. You get one of these ready-made code. You say, okay, what happened if I change this? What happened if I did this? Could I add another line? Can I add 2 more lines here, right? So let's say, imagine I wanted to add 2 more lines, right? Let's do this, and then we can close. So I wanted to add upper 2 and lower 2. So let's say, see, I'm basically copying, pasting, and now I need to define a new dev. Let's call it dev2. So how much deviation? This dev means deviation. Control C. Okay, and let's say I wanted to make it 2 times bigger, right? So I could make it multiply 2 and make it 3 times. But let's say we want to make it 4 standard deviation. So I multiply this by 2, and I'm going to call dev2. Okay, it looks exactly like that, right? So this is how you will modify something very simply without doing too much, and already you have something interesting because you have 2 more. Now you need to plot them, and so I will basically copy and paste these. I'm trying to do it as similar to what is already done, but let's call it 3 and 4, 3 and 4, and then I'm going to see how I called upper 2 and lower 2. I'm going to, what I need to change is now plot me these guys, okay? And then maybe I want to change the color so I can distinguish. Let's make them purple, okay? I don't know. Okay, color purple. Okay, color purple. All right. Yes, here it is. And then I save, right? See, I just added, right? So it's pretty cool. Now I have 4 bands, right? And so maybe I'm committing only when I go for standard deviation. It almost never happens. Maybe if there is a huge big deviation, or maybe, I don't know, like in this case it's maybe too large, right? It's for standard deviation, but whatever, right? I just modified the code where I added a little bit more to the code that was there, right? So now I have something additional, like this one, right? This was so extreme. It went like 4 standard deviation away. So maybe that could have been a very good dip, to buy. And maybe I can put, here, so I can put an alert to, okay, I don't care about 2 standard deviation. Give me 4 standard deviation, and so, it's cool to be able to do things like this, right? So then you can, it's like an invitation also to explore, let's explore a little bit more different indicators, are they useful? Can we add these to more stuff that we're doing or whatever, So then, there is more of us, and maybe you can think about different ideas, different things that we can add to the indicator. That is the entire purpose, You want to, and you can play, and eventually in the next few classes, we will start to go from this indicator to actually the power law. So we can put, I can show you how to actually create a power law in TradingView, like the basic one, where we use, we have already the slope, we have the intercept, and then we can look at the same thing. Maybe we can calculate 2 standard deviation away from the power law and see if that is useful, Oh, yeah. In particular, the adaptive one, but even the fixed one, sure. Yeah. And we can take, what we could do, for experimenting, we can take the power law and then maybe taking a moving average of the power law. That will be interesting to do. Let's see what happens. I never done that, for example. That would be an interesting thing to do. But this is the entire idea. We're learning new skills and we play with all this information because you get more use, right? Like how we can look at the price of Bitcoin, with what you can learn. It becomes like something like you're learning to drive, instead of being like a passive investor. You have a more hands-on approach. Even just to understand, you don't have necessarily to trade, with it. But if you can do things like identifying the dips and other things like that, why not, right? It's a nice thing to learn how to do. Is it useful? Is it something that is interesting and useful? And are you learning something? Tell me again. I missed what you say. Contagious. Okay, that is good. yes. I thank you guys to be here because by teaching, I'm actually learning myself. So I'm very, very grateful to my students all the time because you're teaching me too. It goes in both directions. It's very fulfilling for me too. So thank you. Yeah, Peter, you were asking something about spectral analysis. You know what? I'm not sure. I'm not sure if TradingView does spectral analysis because of course I do it with MATLAB and then I use that knowledge for the TradingView. But many times when I don't know something, I just Google it, right? Fourier analysis, TradingView. There is always some crazy guy that tried something crazy because the Fourier analysis is a little bit complicated because the TradingView has a lot of limitations, so some of the most complicated things are not easy for TradingView. But look at this. Somebody did Fourier analysis. So we can try that, okay? They surprise me when they do it. And there's always some kind of workaround. It's like a workaround, and I can already see how they work around. So, but it's pretty close to what, because there is like an optimal way of doing Fourier transform. Like there is somebody invented a very, very, it's called the fast Fourier transform, because used to be like a very long process if you do it like the original version, and then some clever guy came up with an algorithm that makes it very, very fast. And it's called the fast Fourier transform. And I'm just looking at these. I think they are kind of doing that implementation, but it's amazing, So we could try this one. We can see what you do. You you make it a favorite. Let's make it a favorite. Add it to favorite indicator, and then you can pull it up. And because this person was very generous and made it available to the public, we can copy and modify, and we can try to look at how the Fourier transform. But basically, it allows us to look at all the different periodicity of Bitcoin. It looks for Bitcoin because we could learn something very interesting from this. But we could do it in the next few times and see, and then build something this together. Tell me again. Yeah. But of course, much easier. But it's beautiful to do it with TradingView because then you can visualize it. It's free, and we're learning how to use Pinescript first, but eventually, yeah, I want also to do Python and do different things with Python and visualize with power law and so etc. Right now we are sticking with the Pinescript mostly because it also gives us the data, but we will learn also. We will try to do some stuff in Python too. Yeah. Okay, guys. Thank you so much to stick with me through all these couple of hours. I mean, for me, it's a lot of fun. It's really rewarding to interact with you guys. So let's see each other on next week. Thank you, guys. Bye, guys. Bye.